Hey everyone, thanks for joining us. Today we're talking about something most Canadians don't plan for, but should, that is, disability insurance. By the end of this video, you'll understand why it's critical and how not having it can seriously derail your savings and investments. Let's dive in. Disability insurance is a type of coverage that replaces part of your income if you're unable to work due to an illness or injury. It usually replaces around 60% to 85% of your income, enough to help cover essentials like rent or mortgage payments, groceries, and bills while you're out of work. Unlike life insurance, which pays a lump sum after death, disability insurance pays monthly while you're still alive as living expenses don't stop. Disability isn't rare. Estimates suggest about 1 in 3 Canadians will experience a disability lasting more than 90 days before age 65. Also, as of 2022, roughly 27% of Canadians aged 15 and over, that's about 8 million people, reported at least one disability that limits daily activities. Despite this, many Canadians remain underinsured. Only about 48% of employed Canadians currently have workplace disability coverage, and among those without employer plans, 84% have not bought private disability insurance. And self-employed workers are even more exposed. Just 25% have disability insurance, leaving nearly 3/4 financially vulnerable if they become disabled. Imagine this: you're suddenly unable to work for several months or years. Your regular income stops, but monthly expenses don't. Without insurance replacing part of your earnings, you may be forced to dip into emergency savings, sell investments early, possibly at a loss, postpone or reduce retirement contributions, borrow money, increasing debt and interest costs. This can derail your long-term financial goals. For example, if you have a $500,000 investment portfolio earning steady returns, withdrawing even $2,000 to $3,000 a month to cover living expenses could significantly reduce your long-term growth potential, or worse, deplete your savings completely. This forces you to delay retirement or miss out on compound growth that's key to financial security. And don't assume your job's benefits are enough. Many workplaces' plans may only replace around 60% of your income, and they may be taxable, meaning your take-home could be closer to 40 to 50% of normal pay. Plus, coverage can end if you leave your job or switch careers, which is another reason to consider an individual policy that protects you regardless of employment changes. Bottom line, disability insurance protects not just your paycheck, but your future financial freedom. Whether you're saving for retirement, investing for your goals, or building wealth, keeping your income stream secure if the unexpected happens matters. If you found this helpful, hit like, subscribe, and drop a comment. What's your biggest concern about disability coverage? Thanks for watching.